Well, the market is in fine shape. No problems here at all. The Nifty is now 116 points higher. The good part is we haven't seen any profit taking just yet. And the Bank Nifty holding on to its gains as well. The stock of the moment undoubtedly is ICICI Lombard. 12% higher actually now after ICICI Bank has decided to raise stake in the company. That's looking good. And the market is in a mood to reward good earnings. So something like a Med Plus, which delivered very good earnings last week, is seeing some follow-on buying this morning, up 4.5%. And M&M is actually the stock that is the top Nifty gainer this morning after reporting a very strong performance. Rajesh Jejurikar, the Executive Director and Chief Executive Officer of the auto and the farm sector at M&M, is joining in now to help us understand what went so damn right this time around and what's the way forward as well. Rajesh, thanks a lot for joining in. Appreciate your thoughts. I'm going to start first with the overall business because this time around, it's been really strong for you and you ended FY23 on a pretty strong wicket. Not just that, you're one of the top 25 automakers in the world now with a net profit of over 10,000 crores. So that's a big milestone as well, right, from a global perspective. Tell us a little bit about what the growth triggers are for FY24. I noticed that you've also raised your capex guidance for the full year, both in autos as well as in electric vehicles particularly too. So what is the big trigger and what kind of growth are you seeing for the business in FY24?
Sonia, thanks for having me on the show. Pleasure to be here. And, actually, we were not tracking this measure that you just spoke about. Being in the top 25, I think ranked 22nd company on global auto profits. And in fact, I saw that report come out of CNBC. Thanks for tracking that. For the achievement of 10,000 crores of PAT in this year is quite a significant achievement and quite a significant gain. And when we look at that on a full year basis, that's a 56% improvement in the company's profit after tax. So that does feel very good. It's on the back of many things that the business has done. It's on the back of a very strong auto performance, improvement in auto margins, good growth and market share gain in tractors, and margin improvement in tractors, apart from multiple parts of the group as well, kicking in to deliver a strong performance. So, thanks for putting that out there, and we really feel good about being amongst the top profit drivers. To your specific question on how do we see F24 and the whole electric piece, we have firstly on the auto business we have a very strong order book, over 290,000 open bookings, and we continue in the SUV side to get bookings of 50,000 vehicles per month. So it's a very strong order book, very, very strong demand for our brands. And we would see that momentum continue. We expect the SUV industry as an industry to grow a little over 10% in F24, and we would, I'm sure, gain market share in the year. We are ramping up our capacity. We've already reached a capacity of 39,000 per month. And there are plans to get that to 49,000 or so as a capacity by the end of the year. So the auto side is very positive. SUVs, we've gained market share. Light commercial vehicles, which is where we play, that's less than 3.5 ton segment. Also, we've gained about 5 share points in the course of the year, and a comprehensive new pickup portfolio, which we believe will make us stronger in the marketplace. Last mile mobility, electric three-wheelers have done extremely well and had a very, very strong growth. So, all the parts of the auto business have done extremely well.
So, Rajesh, you said SUV industry, sorry, I just want to come back to that. You said SUV industry will grow at over 10% in FY24. What would this mean for for M&M's overall auto business? What are you looking at? I'm asking because, when we speak to your peers like Maruti, they speak about low single-digit growth for the industry. Overall, I think there's about a 5 to 7% growth that the street is talking about for FY24. Your views here, do you think inflationary pressures are something that could affect sales in the months to come?
Yeah. So, Sonia, just to clarify, I think when you hear the industry growth numbers from other peers in the industry, they talk about everything, including passenger vehicles. Since we don't play in the overall passenger vehicle space, we play in SUVs, which is now 50% of the passenger vehicle space. We expect that industry to grow at about 10%, and we would expect to do better than that. So the 5 to 7 number that you may be hearing is for including passenger vehicle. And I think there is some stress at the lower price points, which is the reason why the overall passenger vehicle market is not seen to be very buoyant for FY. Does that answer your question?
Yes, it does.
All right.
So coming to the tractors. Sorry.
Yes. Go on, sir. Go on, Rajesh.
No, happy for you to come.
No, I was going to ask you about tractors. So on tractors, I mean, could you give us some estimate? I think you sold a little over 4 lakh units in FY23. What should we expect in FY24?
Yeah, so actually I was just coming to tractors, so thanks for the lead into that. So tractors did see a good industry growth. Industry grew, I think, around 12%. We grew around 15%. We gained market share. Actually, we gained 3 share points over the last 2 years. We expect the industry to be in low single digits this year. It's because it's also on the back of a very high industry size of 130,000 plus industry size. So there is a very strong base on which to build. In tractor industries and projection that you got to keep changing and updating as you get more data through the year. Last year too, we started with a fairly cautious tone. We had said it would be low single digits, but then we saw the industry momentum pick up very significantly starting the festival season last year, which is September, October, and the industry actually ended up with 12% growth. So, this is something that in the tractor industry space, multiple factors drive growth. The sentiment, the rains is one part of it. And of course, government spending in rural areas, both agri and expenditures, is also a key trigger point. So we would watch this, but right now, it's just at the beginning of the year, we are being a little cautious about and pessimistic maybe about the industry growth at around what we are saying, low single digits. But we do expect to gain market share, and we would expect our growth to be higher than.
All right. Good morning, Rajesh. Good to speak to you. Well, tell us a little bit about that. What are the levers you have with regard to gaining in terms of market share? Elaborate the Swaraj lightweight platform. How big is that market, and how much can you get? Also, in Mahindra Oja, what will that do for the company? Is exports a focus? How large can that get? So on both these 2 points.
Yeah, great. Nigel, good to see you and good to chat with you. So we have, conventionally the size so far of what is called the lightweight tractor market in India has not been that big, but it's not that small either. So it's now about 50 to 60,000 tractors per year. And our share in that segment is lower than our average market share of 41%. So there is an upside for us to gain share. Both the brands, Mahindra and Swaraj, will come out with the lightweight series. On the Mahindra side, that's been called Oja, and that's going to be revealed on 15th August as a global launch, because it would also help us gain volumes and market share in several other global markets. North America is one, clearly, but also it is an opportunity in ASEAN. We don't play in ASEAN at all today, and that is a lightweight tractor-driven market, and there is a very good upside for us to export and build business in ASEAN as well, and many other parts of the world. So Oja is a strong global opportunity. It's actually 4 tractor platforms, not 1, and we will be phasing out in India to begin with. So it's a global launch, but to begin with in India and then going into other parts of the world by the time we come to the end of the calendar. The Swaraj lightweight tractor series, I'm not going to say too much about it because we're going to launch it this Friday, 2nd June. And again, Swaraj has a very, very little presence there, and we would see Swaraj gaining market share out of this launch.
The other part of the question was on market share overall, right? 41% is what you've closed in at. There's scope to gain further?
Yeah, exactly, Sonia. There is scope to gain further because we've got an entry into new segments. We are also launching an upgraded Swaraj, which has been rolled out in 5 states in 1 horsepower category at the moment. But through the course of the year, we will have the upgraded, new styled, and better lift capacity, better engine efficiency kind of product, which is rolling out across. So multiple initiatives. The Yugo Tech on the Mahindra tractor brand, which is mainstream, would also help us continue to gain market share. So we are very optimistic about gaining market share in tractors in the course of this.
Okay. I just have one last question. You know, in both these segments, right, autos as well as tractors, you are still shy of your pre-COVID margins. So if you look at it in the farm equipment segment, you did about 16.7%. Pre-COVID, you used to enjoy 19-20%. And in autos, you're at about 7.3%. Pre-COVID, your margins were about 8%. Given that there are benign cost pressures now, you're guiding to outperform the market. In FY24, do you think in both these segments you could get back to pre-COVID margins?
Yeah, so just two data points to compare on your question, and we this time put out a comparison of our margin trends compared to F19, because that was a good year with a very, very low commodity price, and commodity price inflation actually started to have, the calendar year 2021. So firstly on the auto side, our F19 margin was PBIT percentage was 7.8%. We are in this quarter at 7.3%, which we think is coming really close to the 2019 margin. As we've explained in the past, when you have very high commodity inflation, the denominator goes up because your prices have gone up, so your denominator goes up. Typically in an inflationary environment are not able to pass the margin on the actual cost. So 17.3 is pretty close to 17.8 now. So that's been a significant shift, and we moved from last quarter of 5.4 to 7.8, to 7.3. So that's a very significant movement, driven a lot by internal cost efficiencies. As commodity softens, of course, there will be an upside to the volume without giving a guidance, but we would see upside to our margins as we get into a commodity down cycle. When the commodity down cycle will kick in is not sure, but the same thing will apply on tractors. So on tractors, our F19 margin was, and we for the first time put out our tractor margin separate from the overall farm equipment sector, because that also has a farm machine segment, and that is something we're investing in for a 10x growth in the future. So on core tractor margins was 18.3%, which is comparable to 19.7, and compared to even sequentially, that's gone up quite a bit from 17.5% to 18.3. So we're seeing a very good margin trajectory, and we would of course put in all the efforts and levers to continue improving our margins.
All right, Rajesh, we'll leave it there. Thank you very much for joining us. So things are looking good, even tractors, which you said, you used the word pessimistic, but then you said, a lot of moving parts there. And in the last few years, maybe things will be better than, what projections are looking like, which is low single digits at this point in time. I guess with the M&M, the only question you need to ask as investors is, what are you willing to pay for it? Because, growth and outlook, etc., seems to be pretty solid. And you just heard from the management. By the way,